All right, Stephen, over to you, my friend.
Gladly. Okay, good day, everyone. Thank you for joining us. I'd like to welcome you all to the Enterprise and Technology Working Group meeting. Some housekeeping items before we begin. Please keep in mind that this meeting, like all WSBA working group meetings, are subject to our WSBA antitrust and confidentiality policies. Please also note that nothing discussed in this meeting should be considered legal, tax, accounting, or investment advice, and that everything discussed for educational purposes only. For those of you speaking during the call, please be sure to identify yourselves, particularly if you are dialing in by phone. With that, I will turn the meeting over to our chair, Sonia Goklani.
Thank you, Stephen. Thanks, John. Today we actually have Kyle, who's been a loyal WSB member for a while. We've had a good time, especially during the COVID time, having innate discussions about where the market is going, and his perspective with this new company with Zero Hash would be very interesting for us, especially in sync with, it's kind of like a startup, kind of a true startup where people are all working remote, and the founder has already done a couple of exits, an ex-MIT founder. So, and he's been able to manage to get funding from some real big names. So we really like to hear from Kyle in terms of how does Zero Hash fit into this whole ecosystem, and how do they play, how do they correlate with the traditional markets, and how do they see it going forward with whether it's crypto winter or whatever 2.0, 3.0, whatever we call it. How is that going to work, and how Zero Hash is going to, how the trajectory, how's the strategy going forward? So Kyle, dear friend of WSBA, I hand it to you. Go ahead. And
awesome.
Okay.
Great. Well, thanks so much to everyone at the WSBA for having me. It's great to see a lot of familiar faces and some new faces as well. As Sonia introed, my name is Kyle Clark. I'm a director of business development here at Zero Hash. Previous to joining Zero Hash, I was at a tax and compliance firm leading their digital asset practice at Sovos. So again, it's great to see everybody, and I'm excited to bring everyone up to speed on what we're doing in the space right now. So to kind of kick it off, a quick introduction, and again, I understand that you all are more ahead of the curve than a lot of people I give this introduction to. So I'll probably take some liberties as I go through, but I always like to say that, the same way that banking as a service exists or brokerage as a service, we are crypto as a service. And what that means is we just try to make it as easy as possible for really any type of organization to embed a digital asset product natively into their UX, their UI. We have no direct to consumer channels. All of our solutions are essentially API endpoints. We like to say that we're the regulatory licensing and the technical plumbing, but it's really our clients who are, the magic that make these programs and these products a success. To give you an idea of who we're working with today, we work really across, as you can imagine, every company that wants to launch a digital asset product, we try to fill that void. However, there are certain verticals that we have a larger presence in than others. When I first started here at Zero Hash, well over a year ago, the majority of my conversations were with broker dealers, investment apps, and they probably make up the majority of our volume today. But we work with groups like Futu, TradeStation, 24 Exchange, Gain, StoneX. We work with a lot of payment processors, MoonPay, Transact, Banksa, some big company news just this past month. Stripe has become a client, so we'll be their preferred embedded onboarding, on-ramp, off-ramp. Neobanks is a group that I'm going to talk a little bit more about specifically. I always like to say in a lot of ways, neobanks are our ideal clients because one, they take compliance seriously. Two, they can build to API endpoints where a lot of the larger banks in the space, if you're built on FIS, Fiserv, or Jack Henry infrastructure, it's a little bit more difficult to iterate. But then from there, they can really build and leverage the entire product suite that Zero Hash has to offer. Of course, how banks grow their crypto program, we always encourage them to start with small, digestible bites. And I'll get a little bit more into what that specifically looks like. But if you think about our entire client base, you could really boil it down to two groups. One is crypto native. And more oftentimes than not, if you're a crypto native firm and you want access to a particular market, we can create a flow of funds that builds a compliant workflow through our regulatory licensing and allows these groups to operate. And we're an a la carte system. So maybe they want to provide their own liquidity or be a non-custodial solution. Those are things that we can accommodate for. On the other side of the aisle, we have Tradify. And that's the group, truth be told, that our investors like to hear more about. I think it makes for a good story. On that side of the aisle, they want a crypto product, but they don't want any of the crypto risk. So what that usually means is they don't want the assets on their balance sheet. They don't want any of the liability. So we're able to essentially embed a crypto product into their existing UX UI, but manage all the complexity, whether it's technical or regulatory, all on our side.
So Kyle, one question around this. Why did Zero Hash decide to go with the SaaS model? Why do you see that as the model going forward, or is it because you want to differentiate yourself? Why would you go with that?
Yeah, that's a great question. And truth be told, actually, Zero Hash was founded as a company called Seed CX back in 2015. And we were designed as a really an institutional spot derivatives exchange in the crypto space. What our founders discovered quickly in speaking with investors was that, well, the enterprise groups that were interested in digital assets, they were much more curious around how they could create their own solution rather than maybe piggybacking off of existing platforms. And again, I'll get into a little bit more of kind of how we position ourselves and why. But being a pick and shovel company, so to speak, we found early on was a lot more appealing. And actually, I guess it's worth probably mentioning now as well that with what's going on in the space, what we have found up until, let's say, mid Q2 of this year, we had, if you could name a business model, I could tell you who reached out to launch a crypto product. Really, we have this thesis that every company is going to be a crypto company, and we were seeing that come to fruition. So a lot of fantastic ideas that have yet to go to market would reach out to Zero Hash to essentially provide the infrastructure they needed to do just that. Well, all of that changed more or less, I would say, mid-May, June. We receive a lot less outreach from those, innovative, maybe Series A orgs that are still looking to go to market. So we've certainly seen a contraction in that particular space, but from the enterprise, at the enterprise level, we really haven't seen any type of, divergence of enthusiasm or desire to launch programs to attract new clients, or, more oftentimes than not at the banking level, stop an exodus of deposits to groups like Coinbase.
Okay. Thank you.
Absolutely. So, I mentioned we do have some fantastic backers. Point72, Nika. We closed our last $105 million Series D round this past January that was led by Interactive Brokers. Some other company information. We're based in Chicago. However, again, we are fully remote by and large at this point. So going back to that value prop and Sonia, I know you've seen this deck, but I don't think you were leading me. One of the things that really separates Zero Hash in the space compared to our competitors, we are a technology company first and foremost. We are not a bank with a crypto solution. We are not an exchange that has, pivoted to allow people to build to our API endpoints. We pride ourselves on how easy it is to, stand up and launch a digital asset product. How long does that take? It depends on the complexity of the solution. However, we've launched a rewards program with a large neobank in about 2.5 months, which was really impressive on their side, more so than our side. But it just goes to show that if the onus is there, it can be accomplished. Again, when we're speaking with TradFi orgs, we can take on the regulatory burden. So it's through our money transmitter licenses, it's through our MSB licenses. We actually have 2 BIT licenses of the, I think 26 that have been issued in the space. Why 2? Because Zero Hash Liquidity Service and Zero Hash Holdings Company are actually 2 separate entities. And that's actually how we act as the liquidity provider and counterparty to our trades when we execute things like buy, sell for our neobank clients. And then finally, again, it's not difficult to find somebody at an organization who's enthusiastic about digital assets. it's more rare to have that same enthusiasm shared all the way up the chain. So being able to not have the risk of having assets on your balance sheet is huge, and would certainly be kind of a game changer for a lot of our clients if they had to report on this. But we are the custodian from a legal standpoint, any from a P&L standpoint. Again, all the assets from a liquidity, custody, whether it be from a treasury standpoint at the corporate level or the individual level, that all falls to Zero Hash. Furthermore, and again, Sonia, great foresight around the SaaS model. Well, what we really try to avoid when we work with clients, or what we're
Kyle, we have a question from Ron.
Hey,
Yeah,
Kyle,
Ron.
I'm sorry. I should have raised the hand on the previous slide. Because I wanted to ask you if we could look at that previous slide for one moment. There's a real elegance to delegating out the need for custodianship and all the stuff that Zero Hash has taken on. I wanted to ask two things. One's a technical question, probably more technical than I should. The API endpoints, are they basic WebSocket APIs? Are they fixed? Are they high capacity fixed APIs? What can you tell us a little bit about the demographics of the types of APIs that firms would have available?
Yep, absolutely. So we have fix, REST, and WebSockets available for things like price streaming and account data.
Yep.
So we can really accommodate for both depending on the model. If you're an institutional broker dealer, you probably want to write to a fix API. That's something that we can accommodate for. If you're more of a retail focused neobank, well, we also have an API set for you that's probably more appropriate for what you're looking to accomplish. You mentioned on the custody side, we are the legal custodian. What I like to say is about 80% of our custody solution is built on Fireblocks infrastructure, on MPC tech. However, we've needed to implement some cold storage options for, again, larger enterprise clients, larger broker dealers. There are now some regulatory licensing requirements that require you as an organization to have cold storage, things like being a qualified custodian in Canada, for example. So we've grown the solution, over time, but from a functionality standpoint, I should also mention that we can host travel rule compliant deposits, withdrawals, and things of that nature, which sounds simple, but it's relatively rare.
Yeah, thank you, Kyle. And that answered my my custodian question. I guess the last follow-up I've got to this is, if I understand it correctly, Zero Hash also did the work to be a registered money services businesses in every state.
That's correct. And to really boil it down, I always say that we can do business in every state except for Hawaii. We don't have an MTL in Hawaii. It's not on our roadmap. But everything else, more or less, you can flip a switch and go live. New York, take that with an asterisk, because even with BIT licenses, the NYDFS is, and rightfully so, conservative. So in a lot of cases, the NYDFS feels more comfortable if the platform is live somewhere else first. So usually when we talk to a client, and of course, from a business case and business model standpoint, New York is a no-brainer, and it should be a layup. Everyone wants New York, and we empathize with that. However, again, this is new. This is going to be a new product for you. I don't care if you're a digital bank or a brick and mortar credit union. There's going to be some things that you need to figure out as much as we prep you for it. So it's always a good idea to go live somewhere else and then flip the switch on New York. You'll be better for it, trust me.
So Sonia won't be able to access from her compound in Hawaii when she goes there, just to be clear.
No, unfortunately not. Or maybe you can just VPN from Ohio like the rest of us.
Thank you, Kyle.
Absolutely.
So Kyle, do you think this is a twofold strategy that you have, that, in case tomorrow you just want to become a SaaS for the pricing, you just want to be like a Thomson, or you want to be a Bloomberg in the crypto space, you have that piece of the puzzle also ready in case that service takes off, versus the only, the other platform part of it. So I see a dual strategy here in place, where you could become just a provider for the services, essentially, because you already have a SaaS model in place. I mean, from a technology infrastructure, I think you've kind of taken care to see how the market evolves going forward. And you could also play in that space just to provide all just information on the, in terms of whether tomorrow it's going to be, it could be market data, it could be, the account, or just becoming an account services provider, or, all the other infrastructure pieces of it, which you have in the traditional derivatives market space, or in the, or the bond space, whatever.
Totally. And that's a great point. And what I would highlight there is, there are some things that we don't do, and we work with partners that do really well, and be able to provide, SaaS solutions via API endpoints creates a scenario and an environment where it's much easier to integrate with those potential partners than it would be otherwise. So that's a piece of it. I would also say that in that sense, well, I don't think any of us, and it's fun to pontificate, but I don't think anyone can tell you where this industry is going to be in 5 years from now. I think some of the biggest opportunities, it's still early. Case in point, we don't have a point of sale solution really at this point. It's something that we're working on. But if a point of sale merchant came to us tomorrow and said, I've got 1,000 merchants, they all want to start accepting crypto payments. Well, from a technology standpoint, yeah, that's tremendously doable in a lot of different ways. But from a compliance consideration standpoint, on our side, how we're onboarding these entities, that's infrastructure that we would need to build out. I mentioned earlier in the call that there's all these use cases. People will come to us and say, hey, here's what we want to do. And my first question is always, well, is it compliant? Because technically, from a technical standpoint, and that's easy for me to say, I'm not a dev, but usually it's doable. The question is, well, is it compliant? And that is almost as much of, if not more, of a learning curve for us and our partners that often are, shooting at a moving target for the products that we can launch and put out. However, having said all that, we know that eventually these pieces are going to fall into place, and we want to have a flexible enough platform to be able to take advantage of those opportunities.
Right. Thank you.
Absolutely. Yeah, again, great questions. And, I was alluding to this earlier, but being a software provider, purely B2B with no direct-to-consumer channel, also allows us to cast a much wider net. So, what do you mean by that? Well, our competitors in the space, and depending on the use case, because there are several, it could be NYDIG, it could be Bakkt, it could be Paxos, it could be Prime Trust. Well, whomever it is, very rarely could you point one out that one either doesn't have a direct-to-consumer model, or one way or another isn't going to encroach on a certain degree of the current total addressable market's, market share. By that, I mean things like FTX offering stocks. So if you were a traditional broker dealer or investment app and you wanted to power a crypto solution, well, I wouldn't think that you would want your competitor, or whom's going to be your competitor, to essentially power that tool. I tell banks all the time, well, I can set up direct deposit today at Coinbase. Why would you work with a group that's inevitably going to eat your lunch? And now, again, the whole space today, it's frenemies. I think that's a nice way to say it. It's like a massive Venn diagram of who does what and kind of where everybody fits in. But being able to kind of stay singularly focused on delivering a technology rather than kind of seeing opportunities where we could go direct to consumer. I mean, if you go direct to consumer, you immediately put a multiple on your valuation. We don't care. We think we're in this for the long game. And by partnering with other industry leaders, we'll have a much more kind of, I don't want to say less rocky, but much more tangible and linear trajectory for success. So speaking about our products, and I touched on earlier that, well, great, neobanks, they can leverage all of it. And it's true. I don't think anybody is today. And every once in a while, a client will come to us and say, hey, we want it all and we want it yesterday. Fantastic. I love your enthusiasm. Having said that, again, this is new. It's going to be new for you. Each new asset you list, each new product that you provide your clients, that's a client acquisition opportunity. So let me kind of just take you through a life cycle of where I think is a great place to start. Crypto rewards. If you are a bank or an enterprise or card as a service, fill in the blank. Crypto rewards are a great place to start because you're talking about a small amount of crypto, we talk to banks that say, well, we've got an older demographic. I don't want somebody, converting their savings into Bitcoin and having Bitcoin dive, 60%. Well, there's protections you can put in place to avoid that. But again, it's a great litmus test, crypto rewards. Who's interested in this? Who's not? Those same people who are interested in crypto rewards, they're going to be interested in custody, in buy, sell. So it's really a natural progression of how you can really grow into this type of program as your clients prove it out. And we say all the time, this should be revenue generating month one of launch. So, being able to offer rewards or roundups on spending, you can evolve into things like crypto buy, sell. You can create a P2P transfer system that is instantaneous without network or gas fees, because it's really just a reledgering on our side. Staking and DeFi yield. Now, talking about the greater economy as a whole, well, to be completely transparent, and everyone's smart on this call, I'm sure you figured it out, we get paid on transaction volume. So, geez, that's, taking a nosedive over the last 4 months. Being able to provide solutions around like staking rewards and DeFi yield, these give our clients a way to continue to monetize the solutions that they're providing for their end users. And, if someone, again, wants to hodl sit on their assets, great, they can do that. And we still have a place for them here. On the NFT side, right now, today, we've got a massive NFT strategy. We're working really closely with DraftKings, who's a client of ours. They're big believers in Polygon Matic in particular. But what we see today around where enterprise clients are talking to us about NFTs, they want to streamline the payment process. So they want to be able to, and I hopefully no one takes offense to this, but I call them NFT light platforms, where I'm coming on board, I'm paying with a credit card, and I'm buying an NFT. Well, that's all well and good, but what's really happening behind the scene is you're taking that credit or debit card transaction, you're leveraging zero hash to convert that payment to the native token that the creator has built the NFT on, and you're simultaneously using zero hash to provide a custody solution for that individual who just bought the NFT. So again, taking that from onboarding Ethereum at Coinbase, transferring to my MetaMask wallet, signing in on OpenSea, we try to push that down to a couple steps rather than 3 or 4. And you can also take out all the gas and network fees that would be incurred in between. So something else that's unique about Zero Hash is the amount of assets that we support today. And by no means do we have an easy path to token listing. Far from it. When any company, org, foundation wants to list a token on Zero Hash, the first thing I ask is, do you have a US-based legal opinion that the token in question is not a security? Usually the answer is no, because they're really hard to get. Not a lot of firms give them. I'm sure we've got some lawyers on this call, and they're expensive to obtain. So that's the first bar that we set as an org before we list a token. Obviously, the SEC came out, highlighted 9 tokens at Coinbase that they believed were securities. Those tokens would never be listed on Zero Hash. So again, a question we get oftentimes from our clients is, well, what if we list a token that is later deemed a security? 2 pieces. 1, you have a high bar of being listed at Zero Hash. 2, you should always conduct your own token due diligence. Now, whether they do or not, that remains to be seen to a certain degree, but you don't have to list all of the tokens that we provide. Our average amount of tokens listed through our clients is 12. But again, if you're Interactive Brokers, who's not yet live, with Zero Hash, they're currently leveraging Paxos as well. But if you're Tastyworks, your TradeStation, your Trade 24 exchange, having more assets just creates more revenue opportunities for you and also creates more of an attractive product as well. Something I like to say is that, well, if you go to CoinMarketCap and you look at the past,
Kyle, you broke up. We couldn't hear you.
I think we lost you, Kyle. Uh-oh. This is what he gets for going to Maine.
I don't know if he's still on Zoom.
Still see him. I'm going to send him a quick note as well. Sorry about this, everyone.
You can just make it audio and get off the video if that makes it easier. Sorry, everyone. He's probably going to dial in again. So just give us a few minutes.
Stan and Sonia are going to give us knock jokes while we're waiting for. We've actually got a couple of new names. Why don't we utilize the time if we could? I know, Anastasia, I've seen you on this call before, but Emily and Ramir, is this your first enterprise working group meeting with us?
This is actually my second.
I'm sorry, Emily. Welcome.
I think my first was maybe like 2 months ago because I was away, so that might be why. So,
You want to say where you're from for the rest of the group?
sure, yeah. So I'm a UK qualified CPA, but I work for Aprio, which is a CPA practice in the US, and head up the blockchain practice. So all this is very interesting. It's seeing all the utility and things, and all the creativity is really great.
Welcome. Ramir?
Yeah, so I think I joined it for the last meeting, but it was pretty low in attendance. I think everyone was on vacation, but yeah, I really am enjoying the zero hash presentation. I'm joining from the Bitwave side, and yeah, I've spent like the past few years like working in like large crypto institutions, like on the specifically on the finance and accounting side. So definitely super interested.
Welcome, my friend. Good to see you again. And I don't know who Andy Mai is who just joined, or that's Kyle using someone else's. Oh, hey,
Yeah.
Andy, how are you?
Hey guys, how you doing? Sorry I joined late. Yeah, let's look at a quick intro. My name is Andy Mays. I'm the principal architect here at Luca. So what that does is we mainly is a SaaS service provider for institutional traders in the crypto space. We provide market data as well as post-trade software management systems across the entire spectrums. Our typical clients sits about invest in 5 million and top above in the space, and we cater to every single companies within the trading ecosystem: custody banks, prime brokers, exchanges, settlements, auditors, custody banks, and all the players within the ecosystem.
Andy, I'm probably going to get this wrong, but is this the first time you've joined our enterprise and technology working group?
Yeah, I was actually always been on a couple of times, on and off, but yeah, nice to meet everybody.
Good to have you. So Andy, I know you got here a little late. We lost our speaker. I know he's up in Maine. We'll try to get him back on. But Sonia, do you and Stephen want to chat a little bit about MEV? Stephen did a lot of work on a great primer we're kind of reviewing. I suspect, Sonia, you'll want to have some colleagues review it and maybe add thought leadership to it as well. But while we're hunting down Kyle, do you want to start the MEV conversation, Sonia?
Sure, absolutely. So I'm not sure if you guys are familiar with MEV. I mean, this whole concept about the mining, people are earning the mining revenue. So I kind of compare it to traditional markets where, if you have a trade in an equity trade in high frequency trading, and you front run the trade and you add like a percentage point, just make sure that the trade goes through. So in the similar concept, in the mining space, you could actually front run a block, or you could add a transaction and a point to it and make additional revenue out of it. And that revenue, MEV, is basically to the tune of, people have actually made about $700 million as of last year. So, you actually caught them, the robots out there basically tracking this. And it's obviously a regulatory, there's going to be some kind of regulation at some point in time coming in. So the reason I actually kind of started looking into it, one of our clients, it's actually a very well-known hedge fund. They were actually trying to use MEV in such a way that they could actually come up with a strategy. I can't tell you what the strategy we did for them, but we kind of worked out a whole strategy in terms of how they could have their similar kind of equity strategies that they had for the equity trades. They could leverage the same strategy on the crypto side. And this particular fund is actually trying to, before obviously the regulation pops in and kind of you lose that channel revenue that you're making. So it's actually a pretty complicated, and I've only understood, I think, even after doing so much of research, and our team has, even though we've written the strategy for this particular fund, it's still, in the infancy stage of understanding it. There's a research organization called Flashbots that's actually trying to provide analytics around it and data around it. It's an independent nonprofit organization. I can send you the link where they can actually they give you all the data in terms of where this particular how much mining revenue has been earned on which particular token or which particular block. So we can. Oh, we have Kyle back.
I think he's connecting to audio right now. Hey, Kyle.
So sorry. So stereotypical Maine of me to run around trying to find internet service.
No worries, no worries. We started going down the road of talking about one of our other topics, but are you good to kind of kick off where you left off?
I am good to kick off. And for a second, I thought I was just because no one likes to talk about reg licensing, but I am back and I can go ahead and share this.
And Sonia, we'll revisit the MEV conversation again. I didn't mean to cut you off there, but we'll get
perfectly fine. Kyle is the star of the show.
Awesome. Wow, that's used loosely. Well, I appreciate everybody rolling with the punches. And again, sorry to get kicked off there. I had mentioned that the vast majority of our licensing today is here in the US. And the nice thing is, in a lot of ways, our licensing is low-hanging fruit, because if we're working with crypto native firms that need a framework to go live, particularly in certain jurisdictions, we can provide that pretty simply. So while we're licensing today is here in the US, it's something that we're looking to build out internationally. We have an MSB in Canada right now pursuing a qualified custodian license. In the UK, we're pursuing FCA, EMI licensing. We're registered with Austrac in Australia as well, working with the Monetary Authority of Singapore, working to get a Type 7 in Hong Kong. So as regulatory bodies issue guidance around the specific regulatory requirements, we will certainly continue to kind of pursue those as they arise.
Kyle, sorry, one quick question, if I could, on the regulatory requirements. Does that also extend to, particularly for your neobanks, things like SARS reports, for example? You with us, Kyle?
Wes, if you can hear me.
We might you might want to go off video, amigo. Maybe that's killing a little bit of bandwidth.
Maybe let's try that, if that's any better.
Yeah. So my question real quickly was, does that extend, particularly for your neobank customers, to things like SARS reports, being that they're kind of outsourcing regulatory?
Yep. So that's on us.
Got it.
Yep. That all falls to us. And then, the only other option that we kind of run up into against is if we're working with a broker dealer or a bank outside of the US that wants to run an omnibus model, where again, we're not necessarily collecting that end user PII data. We're allowing the organization to be the counterparty for the trade. Well, they can take on that responsibility, but there's a lot more reporting requirements that fall to them if that is going to be the case. So we just want to make sure that they're aware of that.
Great. Thanks so much.
Awesome. And, not to go through each of these, one by one, and given how fluid this environment is, hopefully this information is relatively accurate. But the point that I always try to make here is, if I'm speaking with an organization, how are you future-proofing your product? Are you building this for the next 6 months, 12 months, or are you thinking about 1, 5, 10 years? So whether it's things like NFT support, yield staking, I think another advantage that we have is, again, we are a technology company first and foremost. So we want to be able to fill these gaps. Things like UTMA accounts for miners is something that we've seen be pretty unique and pretty high in demand as well. And Andy, I see that you have a hand raised.
Sorry, Kyle, Andy has a question, and while you were away, and I just wanted to know, Andy is from Luca, and they're actually looking for a solution that you have. So Andy's question may be very relevant to the whole pie. Go ahead, Andy.
Awesome. Thanks, Sonia. Yeah, Kyle, awesome. Nice to meet you. This is Andy May from Luca. I think this is great. This slide is awesome. Actually, some of these names definitely resonates very well with us. some of these guys are sister companies that we share the same VCs, and all these guys are actually a partner of us, right? So one question I do have for you, I just want to understand the zero hash play here. How do you guys stack up against Circle? So I understand Circle is a stable coins, mainly that they do want to do money remittance, currency transfer and that kind of space. How do you guys play into that space?
Kyle, did you get the question?
Yeah. And I would say,
We're not getting you, amigo. I'm really sorry.
I used the term frenemies before. That's a good example. I did. Can you hear me? Can you hear me, Sonia?
You're breaking up a little bit,
So
Kyle.
I did get the question. I'm not sure if you can.
We can hear you now.
I think we lost him again.
Do I still have you? I see you here.
Yeah, okay. Go ahead, Kyle.
Okay, great. I was just going to mention, Andy, that was a great question. I gave the example of frenemies previously. So whether it's Fireblocks or Circle, the biggest differentiator between zero hash and often groups like that is the regulatory licensing piece. So Fireblocks, Circle, they don't have the MTLs, the MSBs required to stand and launch these programs independently. So if you're going to integrate with a Circle to provide this type of USD to USDC on-ramp, you would need to rely on really the platform's licensing in order to accomplish that. So that is the biggest difference that I would say. And also I can't speak intelligently to, let's say, for example, the amount of assets that Circle provides liquidity for. We've partnered with them to provide one-to-one USD to USDC conversion. So in that sense, I'm very familiar, but that's really what I would highlight as some of the differentiators between zero hash and Circle specifically.
Got it, Kyle. That's helpful. Thank you.
Go ahead,
Awesome.
Kyle.
Great. So I always like to throw in a client example here, and these are actual screenshots from MoneyLion. I'm not encouraging anyone to lean and squint at their screen, but on the far left, you'll see in the terms and conditions, or I agree to zero hash liquidity service user agreement. We do operate, particularly when we're working with Tradify, a fully disclosed model. So their clients, our platform clients, are really becoming our clients. I typically like to say this is the only time that users see zero hash if they're looking really closely before they hit the checkbox. Otherwise, our platform clients control the entire look and feel. The caveat to that is there are regulatory implementation standards that we need to be sure our clients adhere to. So making sure that they're describing products the right way, you always, things like making sure you're not saying it's FDIC insured, for example. Now, people on this call may get a kick out of this. We always, when we start working with a client, we give them a packet that essentially outlines the regulatory requirements that they have to abide by. It used to be about 13 pages back in mid-May. Mid-July, it became about 25 pages. So I always think, albeit it's a little macabre and uncomfortable, a lot of the distress that's been caused in the market as of late, people don't solve problems until the problem exists. So we see a lot of regulatory bodies actually addressing cryptocurrency now that may have would have kicked it down the road continually if there wasn't an issue, which is unfortunate, but I think is pretty standard. So the last piece that I wanted to leave everyone with, and again, I appreciate you all bearing with my connectivity issues. We do a great job. There's another Queens we. Our marketing team does a great job at helping our clients tell the story of why this program has been a success. So whether it's neobanks, payment processors, broker dealers, we really do have a wealth of information and data on our site around how these programs were launched, the particular compliance and technological concerns that we help them overcome. But more interesting, I think, than that is the levels of engagement that they're seeing, which is always higher than expected. So with that, I'll take a step back because I know that we did get unplanned intermission in between. But would love to answer any questions. Again, Ron, I know this is being recorded, but feel free to circulate the deck. The second half of the deck goes a little bit more into the technical workflows of how clients specifically are launching these programs and a few other details. But want to open the floor and leave time for Q&A.
Thank you, Kyle. So if anyone's got questions, please raise your hand, speak now, certainly. Kyle, I wanted to ask a couple, I spend probably an inordinate amount of time looking at some of the regulatory aspects. What are your thoughts, or what are the Zero Hash team's thoughts on, there's this kind of turf war going on between the SEC, where everything is a security, and CFTC. How plugged in is Zero Hash to that kind of portion of the conversation? And would any change there, in other words, everything becomes regulated under CFTC as a commodity, does that change any of the work or model that Zero Hash has, in your opinion?
Yeah, that's a great question. And I think, I don't want to say in a perfect world, but if the CFTC route came to fruition, I don't see a lot of changes that would be incurred. Of course, there would be some regulatory compliance adjustments, I'm sure that we would need to inevitably make. I think that what's more top of mind for us, and probably everybody else in the industry, is, well, if this falls under SEC purview, is there going to be, in addition to the assets that were highlighted through the Coinbase issuance earlier this year, is there going to be sweeping impact? Now, we are, as an organization, probably overly conservative in the sense that we've got licensing on a state-by-state basis. We need to play it extremely safe. There are certain things that we just won't do. We work with DraftKings, but we won't let DraftKings essentially leverage crypto for sports betting or anything to do with fantasy sports. Cannabis would fall into that category, so on and so forth. So if the SEC came in tomorrow and issued a sweeping ruling deeming half of the 60 assets that we support today as securities, well, we could flip a switch and restrict access to those assets. Essentially the same song and dance that occurred with Ripple, 4 or 5 years ago, at least at this point. So that's really how we handle that. And I think a lot of that is making sure you're setting expectations right with the platform clients. Again, I've said this a few times on the call, but digital asset products are new for everyone, whether you are a digital bank or a brick and mortar credit union. You have to understand that you're operating in uncharted territory. There are going to be things that we figure out together. Every client relationship is a partnership. However, some are much more partnerships than others. This would fall into that category, and as a result, I think success and failure is more kind of intrinsically tied to one another. So you got to be flexible. You got to be ready to communicate, with your end clients what's taking place. Again, I think that's just kind of a broad rule to live by in the space.
Thanks, Kyle. You know me a long time, so I'll always have additional questions. I've got one more follow-up, and then Sonia wants me to shut up so we can get other questions from people on the call. One of the things I've been tracking quite a bit, and am interested in seeing how it develops through industry. Again, it's another regulatory focused question. Apologies for that, but it's kind of OFAC and the sanctions list, and I wonder how difficult it is for companies like Zero Hash in the world of sanctioned wallet addresses and now increasingly different mixer services. How difficult is that regulatory overhead for Zero Hash, and how do you keep up? There just seems to be so much activity in this kind of sanctioned wallet space.
Yeah, another great question. So to answer it in a few different ways, the easiest and low-hanging fruit of that answer is we leverage Elliptic as our kind of embedded screening tool. So if we ever work with a banking client that wants to enable something like deposits, withdrawals, we will be the tip of that spear, so to speak, from a sanctioned wallet standpoint. Usually, well, always, I would say, when we're working with Tradify, our clients are leveraging Zero Hash liquidity services. All of our liquidity providers, there are about 15 of them, they all custody assets within the Zero Hash ecosystem. So if you're sourcing Zero Hash liquidity, these assets have already been screened. Now, again, if the end user is going to generate a deposit or withdrawal, we would use Elliptic to screen that. I think I mentioned before we are travel rule compliant and participate pretty actively in the working group. However, at the same time, if you go to zerohash.com, we have a list of permitted jurisdictions where we can operate. And typically when we operate, it's under a reverse solicitation model, where because our platform clients are embedding our solution and we're not soliciting the services directly, we can do two things more or less. Piggyback off our platform clients licensing, and then the client becomes adherent to our existing licensing here in the US. Now, that works, but the truth is it really operates more in the gray area than anything else for those regions that don't have clear guidance. But again, what we've seen, I think, Canada back in December of 21, issued guidance on what a qualified custodian is. I know in April, Hong Kong updated their guidance that would essentially drop crypto trading into a type 7 license. Monetary Authority of Singapore has always been ahead of the curve. The UAE issued new guidance. So does it keep our compliance and legal teams up at night? Yes, but I also think they realize that they better get used to it because it's not a trend that's going anywhere. At the end of the day, I say this lightly, but more guidance, more regs are better, because I don't think you're going to see the level of enterprise adoption that a lot of people are projecting without the guidance in place. And I can think of 10 or 15 Fortune 500 POCs that we have operating in our sandbox environment right now that will not get off the shelf until there is specific guidance around things like crypto as a security.
Yep. Great. Thank you, Kyle.
Absolutely.
Rumir, I'm going to put you in a spot. Rumir, you there?
Sure. Yeah. Yeah.
Usually inside. So do you have any questions?
No questions for now. I'm still this is like my first real deep dive into zero hash, so I'm really just trying to wrap my head around, because it's a really complicated product, right? And you guys offer like a lot of basically variations to different customers. So I'm really just like, when you say, I guess my one question is, when you like reference like the zero hash ecosystem, like what exactly does that mean? Is that just like all of your partners, all of your networks, and all of your products that you're referring to, or is there like a I don't know, server or like a cloud space that is like more of like a tangible, I guess, digital ecosystem?
Yeah, that's a great question, Amir. And if I understand your question properly, when I say the zero hash ecosystem, and you're so right, I throw that term around, but I go back to that Tradify example where, let's say you're a bank, you want to launch a crypto product, but you don't want to touch it at all. So you're essentially leveraging, I would say, the entire zero hash ecosystem, which really consists of 3 parts, right? It's the liquidity for the trading, it's the settlement infrastructure, and it's the custody solution that we're providing on the back end. So TradFi, they leverage the entire zero hash ecosystem. And if we're dealing with, let's say, 2 users at MoneyLion who want to send crypto back and forth from one another, well, that's not an on-chain transaction. That's a reledgering. So that transaction stays within the zero hash ecosystem, so to speak. Now, you may be a non-custodial solution that wants to leverage your own liquidity. Okay, great. You can still build a compliant flow of funds leveraging zero hash, but we'd be sourcing liquidity elsewhere. We'd settle through our infrastructure, and then upon trade settlement, we would then automate a withdrawal to a MetaMask wallet or a cold storage wallet. We'd collect that address, upon trade execution. But the real question is, you're going to be in the zero hash ecosystem one way or another. The question is it end to end, or what piece of it are you leveraging?
So Kyle, to that question, how do you compare yourself as in the traditional market space? Who would you think you are like, just to give the users understanding? Would you call yourself a Boni, or would you call yourself a Global, or who would you call yourself?
Yeah, and again, I think a lot of times it depends on the specific use case. So if we're talking or speaking with an investment app, I would closely parallel ourselves to a Drive Wealth or an Apex. If we're talking to a bank, I would parallel what we do really similar to a Galileo, almost. the concept of embedded finance in fintech is relatively new. So again, depending on how you're looking to leverage zero hash, or I guess the real question is the type of digital asset product you want to launch, that would then draw up the comparison board. And albeit I showed you, 5 of them or so, however many it is here, the real question is, what are you trying to accomplish, and what are your concerns? What are your goals?
I mean, so to sum it up, so it depends on the type of product you're trying to the customer is trying to launch, and the kind of institution also, right? So it's kind of dependent on those 2 factors in terms of the type of institution and the product. Did I get that right?
Absolutely.
Okay.
Absolutely.
Yeah. So the institutions you're targeting are basically banks or funds. Is that what Zero Hash is trying to target?
No, not funds. Banks, digital banks are low-hanging fruit. The problem working with larger institutions is some of the infrastructure they're built on makes it hard for them to iterate.
Right.
I like to say, and I talk to community banks and credit unions all the time that are interested in crypto products. However, if you don't have, and I've made up this benchmark in my own mind, but if you don't have 10 billion AUM, you probably have an IT manager, you don't have a dev team. So it's really tough to build to API endpoints. And that's why groups like, NIDIG, for example, has done such a good job forming these partnerships with FIS and Fiserv. When I say to prospects that I'm speaking with, well, have you looked at that type of solution? They say, yeah, we have. Usually, more oftentimes than not, in order to deploy a crypto solution through an FIS or Fiserv, fill in the blank, there needs to be a lot more infrastructure that is upgraded along the way. So when I talk to clients, oftentimes at the banking level, the real question is, well, do we want to rebuild the entire customer journey using zero hash and their endpoints, or do we want to upgrade our entire infrastructure, through our existing vendor Fiserv, so we can provide crypto services? And again, through, at least today, through NIDIG, that's really just Bitcoin.
So you do see a big number of, like a lot of neobanks come into the space, essentially, right? I mean, as you know, because the traditional banks have a lot of regulation or limitations because of which they haven't stepped into the space directly. Indirectly, all of them are there. But
Yep.
what do you see in terms of the percentage of the people coming into the space from a bank's perspective? How many banks?
Yeah. There's a massive dichotomy of just knowledge in the space as a whole today. So by that I mean, every bank, every financial institution, I think, again, is interested in cryptocurrencies and digital asset products. I don't think it's difficult to find somebody at a bank that is interested in launching one of these types of products, geared towards client acquisition. The real question is, well, how easily can they do it? So, the digital banks, the neobanks of the world, and to kind of give a quick rundown, groups like Moneyline, Curve, Current, Step, Eco, Oxygen, they're all zero hash clients. I think at the neobanking level, we have a tremendously competitive solution. Take that with a grain of salt. I'm obviously biased, but we've got a few other large kind of top, what I would say 10 or so by size neobanks that are leveraging zero hash, and you'll see go live for the second half of the year. They can adjust more quickly. I think the largest issue with neobanks, at least that I have found, at the institutional level, it's can we integrate with FIS, Fiserv, et cetera. At the neobank digital banking side of it, it's often, well, does our sponsor bank have a problem with us dealing with crypto? So if, and I see Ramir nodding your head, it's kind of the story of my life where I'm talking to these banks and I'll ask, who's your sponsor bank on the back end? Because some are just more accommodating than others. So, groups like Evolve, Meta, I could give a much more extensive list. Obviously, Silvergate Signature, people that we bank with, BMO Harris is great. Blue Ridge, I know, is okay with it now. NBKC and Choice can kind of be a little finicky, and usually it takes a couple of conversations. Groups are coming around to it. And at this point, we've actually integrated zero hash into banking as a service platforms to essentially provide these solutions directly and bypass us. So we think over time, it's going to become more and more difficult for a lot of these sponsor banks to stay on the sidelines.
Okay. Any other questions? Anybody? We have like 2 minutes. Ron, do you have any announcements?
I have a couple of announcements. The last Wednesday of the month in New York City, as Stan had mentioned earlier, we're having our WSBA member cocktails. If you're around, drop us a note. We're happy to add you to the invite. We've got several other member events coming up. You'll see that in the newsletter calendar as well. It's looking like our Crypto Investors Summit will be partnering with, and it's not announced yet broadly, we're partnering with Thomson Reuters to hold it at 3 Times Square on, it looks like November 10th. Everyone, please stay tuned for that. Kyle, it's always good to see you, old friend. Grateful that you were. And by the way, for the record, Kyle, I believe, is the world record holder for being able to answer the worst joke of the week at WSBA virtual happy hours. So it's always
Gotta
good
hang
to
your
have
hat
you
on
back.
something.
Yeah.
Yeah, but did you get your mug?
Oh, I think I've got a couple of them.
He's got.
And if I was in my Boston apartment, I would be able to have it with me and show you. But I missed the happy hours, and hopefully I'll be able to rejoin and see you all soon.
We're looking forward to having you back. Would love that conversation with you, Kyle, when you can. Any final questions from anyone on the call? All right, Kyle, we'll make the recording available. Obviously, you and the Zero Hash team will get an opportunity to review it before we do that. We'll eventually ultimately post it on the WSBA's YouTube channel as well. But looking forward again, brother. It was good to see you and looking forward to working again soon.
Yeah, I really appreciate the opportunity, and thanks so much, everyone, for taking the time. Have a good day.
Take care, everyone. Bye-bye.
Everybody for joining
Bye
us.
now.
Bye.